Good morning. Welcome to Beyond the SEAF Model. I'm Jack Kosar. This is effective for the week of March 17th, 2025. Let's get started. SEAF signals for this week. We have utilities, healthcare, and energy. Utilities and energy are new for this week. Healthcare remains. We are seeing some nice strength in utilities overall with threes for tactical month in the strategic quarter and a 2 on the trading week. Healthcare definitely being held up by its tactical month and strategic quarter as it's taking a little bit of break after 2 consecutive weeks of strong inflows. And energy comes in with our top spot on the trading week, which pushes its tactical month into trading of 2 and really being held up by its strategic quarter at 9. We've kind of made some talk about real estate. We'll highlight something a little bit more in a second on the chart, but still hanging around in that 4th spot. Financials, seeing a little bit of positive momentum in industrials. Communication services really took strong, had some decently strong outflows, and consumer discretionary relatively weak across the board. Moving on to our heat map. A lot of interesting things with flows last week. 3 of the 5 days last week, we had outflows of greater than 1% for an overall net outflow of negative 1.66%. You might ask, how do we have 3 days of 1% outflows and only negative 1.66% outflow for the entire week? That was due to a Friday 2.2% increase in flows for all 11 sector spiders. This does not happen very often. It's happened 2 times in the last 6 months. Those dates coming at 11/6/2024 and 8/8 of 2024. Highlighting on this chart just so we can see real quick where that is at. The first one being 11/6. So we had this jump right here. From 11.5 to 11.6 this day. This gap up was a 2.2% or more move, and then the other one coming on 8/8, August 8th. Both were at near relative bottoms. What is that telling me? This could be something that we want to take an eye on. That strength of inflows. We had a 10% move from August 8th to this peak here. And in this case, from the November move with over 2%, we had about a 3% to the peak. So is that predicting anything? No, not necessarily. We were largely sideways after that big 2% move in November, and then we had a nice little run on the one after August. Just more of a note to say that there's potentially some dip buying around here. Will we be able to sustain that? I do not know. These flows also, Friday's flows are not incorporated because we don't get those until later. They're not incorporated in any of our SEAF charts or tables at the moment, but just a key to note that a big percentage move like that has both resulted in a sideways pattern for a while as well as an increase. We don't necessarily know, but it is interesting to note. Heading back to our heat map. Energy coming in pretty strong at a 0.56 increase on the week. That increase is really kind of blended into the tactical month. And, we have been getting some questions, and I just wanted to address it here, is sometimes we see sectors really shoot up and shoot down the model with what seems to be incalculable reasons. Let me tell you that one of the reasons right now that we're seeing a lot of rapid movement from top to bottom and bottom to top for SEAF is that flows prior to the last 2 weeks were extremely weak. With a lot of things that are happening in Washington and just geopolitical issues as well, there's been some massive uncertainty, and we were not seeing any flows that were really pushing hard in one individual direction. And as we started to accumulate those weak flows after weak flows, strong inflows in any particular week can really ratchet up, especially in this trading week and tactical month, can really shift that algorithm to push one or another. While that seems like it can be a little bit, it's actually a strength of the model, because when we don't have a lot of strong flows, there's not a lot of conviction in any one particular sector. So we do want to see, once conviction starts to take place, we can then jump on that opportunity, and energy is a very good example. Strategic quarter of 9, really strong inflow of 0.56 on the trading week, was able to really shoot that up into the upper echelon, actually making it a SEAF signal. It allowed it to jump overhead. Like I said, real estate, we're talking, taking a little bit of a break. It just never got the flows to sustain that idea to get it into a SEAF signal. Utilities looking relatively strong at 0.29%. And last but certainly not least, seeing some, strong outflows in the communication services, consumer discretionary, and technology band, all kind of outflowing. We will see what that 2.2% increase on Friday did and see if that is a directional change in the current market. But as of right now, strength up here at the top with healthcare taking a little bit of a break. Heading into our rainbow charts, mentioned communication services. Communication services kind of took a header here, was favored, dropped right down to avoid. We are seeing that kind of a peak here in the relative outperformance versus SPY. Will this be sustained? And we see it down, seeing relative performance kind of down to lows that we were seeing back in August of last year? Or is this just going to be a quick little reprieve to a move higher? We don't know yet. But, the nice thing with communication services has been trending relatively slowly versus some of the other sectors. So we will see if this is a dip to back into purchase, or if we're going to go into a void into more of a corrective phase for communication services. Looking at real estate, we mentioned real estate a couple of weeks ago as liking that positive momentum. That momentum has more or less stalled. We were sitting here in this similar range. We got up to the relative outperformance that we saw mid-November, early December, and we looks like we stalled here a little bit. Now, that is not to say that a strong inflow can't move up, but with a lot of the tariff pressures on building materials, and real estate costs to build potentially going up, we're kind of in a little bit of a no man's land. So we'll look to see what happens in real estate. Not a SEAF signal but just been sitting on the outside for the last couple of weeks. I would like to see some strong flows that would really kind of blow through this upward resistance in the relative outperformance chart below. But until then, we're kind of sitting in that lower favored, upper neutral area. Going into utilities. Utilities is back. We took a brief interlude here where we went more or less sideways as we sat through neutral, accelerated up into favored. We are seeing some nice positive relative outperformance, breaking this little bit of this upward resistance. The next big level here is coming back from October of last year. We'll see if we can get some sustained flows, but flows looking relatively strong in utilities. So if we can continue that trend, get into that real upper favored, we could see this take the relative outperformance take off. Energy. Energy is in a similar boat. Energy is a little bit more we've seen a lot of fluctuations in energy. So we did see a bunch of capital flow into energy. As I said, it was the top trading week, top for the trading week this week, coming in second in the tactical month, mainly from this last week's trades. We would like to see some sustained flows here. It is a SEAF signal. We are seeing some positive momentum from 9 to 2 to 1. So that's all positive, but we will need to see some really sustained flows coming into energy, as we have seen kind of this show before, both in November and then January of this year, where we have attempted to break through into this favored, got a little bit of relative outperformance, and then it stalled. So we're going to keep an eye on energy, and see where it goes. We obviously are not projecting out any of these cash flows. We're reading the data and following it as the money goes, but we would like to see a couple of weeks of sustained high inflows on energy in order to try to sustain this upward move. Last but not least, looking into healthcare. Healthcare has relatively outperformed going back, since early part of February, and we are seeing that nice relative sitting in upper favored here. Relative outperformance looking relatively strong. We did have a little bit of a break in flows for healthcare, but that possibly could be some profit taking, as was a nice relative outperformance move. Flows still look relatively strong through both the tactical month and the strategic quarter, so be looking for healthcare to kind of rebound and getting a little bit more strength in here. But overall, healthcare looking relatively strong, even with a little bit of a dip to mid-favored. That is all I have for this week. I look forward to breaking down the SEAF model with you all next week, and thank you.